What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is April 10th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to talk about why I believe we are about to enter into the final move for Bitcoin, slightly to the upside, right before things come crashing down. I want to spend time to talk about three critical charts that I think you guys need to see, that while the short term may look optimistic, the longer term time frame signal that we are still in a long-term downtrend. I know it may seem far-fetched, but I want you guys to see these charts and think for yourself as to whether or not you agree with me on this or not. If you guys enjoy this video, if you like my rambling, consider dropping a like. It's always the best way you guys can support the channel. And let's go ahead and dive into the rambling. So I want to first start off by taking a look at the short term here, because if we take a look at Bitcoin's price, I understand as we've been pushing sideways here, and it looks like over the last 24 hours, we really had this small buildup here that looks like maybe we could be springing up higher and really continuing the supposed bull market that many people are convinced we're in. But I want to go ahead and try to get back to a neutral viewpoint. I want to try to step back into long-term time frames. While daily momentum on our key momentum indicator here is very important, at the same time, I want to zoom out and ask whether or not the long-term trend has broken through some serious levels to confirm further move to the upside. Are there any different types of charts or indicators we can take a look at that can give us this insight? Well, let's go ahead and take a look at a couple of them. The first one I want to talk about here is Bitcoin market dominance. Now, Bitcoin market dominance is one that you're likely aware of, but the thing is, a lot of people don't revisit it as much as they used to back in the previous days. And it's probably more relevant now than ever in determining whether or not Bitcoin's really ready to size up and make the next move. Because when we see Bitcoin dominance actually sustaining a long-term uptrend of higher lows and higher highs, that can be one of our first telltale signs that we've kicked off another bull market. Bitcoin, practically every single time since altcoins have really been a thing, or at least an established market, Bitcoin always leads the way because it serves as the initial easy way for liquidity to inject in the market through one central asset and then distribute across a variety of other players. As people get greedy, they get more speculative, times get good, and people start taking on more risk, and therefore Bitcoin dominance declines and altcoins start to spark towards the end of a cycle. But let's go ahead here and just take a look over the past 2 years. We are coming up on retesting, actually we are currently already retesting a significant range since as far back as nearly 2 years ago, since back in May of 2021. And this was during the period of time where Bitcoin essentially was setting in its all-time highs, or at least roughly close towards the highs that came in November of 2021. Practically the same range. Actually, it was really almost like a double top, if you will. I think that that's the best way to view this here. This was really when the peak euphoria, and on top of that, really that peak altcoin circulation was really in play. Bitcoin had had a significant decline into this range. And since then, during that period of time, while we've had some jolts in price, at the same time, the last 5 times we've entered into this range between 47 to 49% market share for all of cryptocurrency market cap for Bitcoin, pretty much almost 50% of the market share in one leading cryptocurrency. Every single time we have come into this range, we have gotten shot down. And this chart is very critical to focus on, not only because of its consistency here, but also with our key indicator LuxAlgo, one of our key partners here on the channel. Look at that, coming right into that red band. It is a question now of whether or not Bitcoin can really break above there, get above that 50% market dominance metric, and continue climbing higher. Take a zoom back here towards previous bull markets. Notice what happened here as we went through January 2018, right? As we started to move up during the bear market, Bitcoin accelerated and gained a lot of market dominance here going in towards the bear market lows of December 2018. We have not seen that kind of move. And of course, I don't think we're going to see that much of a significant move, and I'll explain there's a couple reasons for that. One of them, to be fair to the bulls, is that altcoin dominance is just generally going to be growing larger over time. That's a very fair point to consider. But at the same time, we are going to need to see a bigger move than this, because as you actually went through the bull market from April 19th to September 2019, we saw that there was a continued acceleration from 52% to 71%, getting back into territory from the prior bull market. I would, at a minimum, want to see us get above here so that we have that range for Bitcoin to continue accelerating. If not, I'd rather get long on altcoins if we're really entering into another bull market. Anyways, case in point, the point here I want to make is that if we cannot clear through this range, we are not moving on towards a bull market. And this is a very far extended relief rally, like we have seen time and time again, like we saw back here in the summer. It could be yet again history playing out. And so far we've been seeing stagnation in this red pocket. Lux Algo saying that price could be facing some resistance here. History showing that through dominance, not a good sign. Now, one thing that I want to go ahead and talk about here, I think is very critical, is focusing on the momentum indicator we utilize for trend shifts on the monthly time frame. And this is something that is really standing out to me personally. Now, what's really great about this momentum indicator is that it will let us know on any time frame when we're generally expecting a trend reversal. And it's got really solid degrees of accuracy. I'm not one to say that any indicator is going to make you guys a millionaire, that it's always going to work, but the consistency on this indicator across different time frames and more specifically different asset classes is what has me really concerned here for Bitcoin and asset markets as a whole. It is very good at being able to determine the difference between relief rallies and a full-scale secular bull market that can carry on for the next few years and really has the legs and liquidity to be able to drive higher. So let's go ahead and take a look at this here. First off, we're looking at Bitcoin on the monthly time frame. Now, I want you guys to just take a look at this momentum indicator. We'll come back here towards the current cycle we're in right now in a moment. There's already some things you might be noticing, but I want to go ahead and take a look at the last few bear markets. You could see here that each and every time when we would basically find the bottom to each market and we'd start to move higher, within about a month or two of that accumulation range, we would start to see a blue flip. This is a positive sign of momentum, right? Red usually signals the further downside to come. In these cases, when Bitcoin is kind of an early asset class, like it was in 2011, it's a little bit wonky here, especially after an acceleration from a couple cents to all the way up to $31. Not bad if you could get it. But as you can see, it really tells us that the bull market lets us ride the vast majority of the wave here and also covers the vast majority of the bear market. And right as we got out of that accumulation range, right at around a range around $322, again, wonderful entry point if you can get it. It flips blue after the month. You can open up a position here at 322 and ride the wave. And same here as well in 2017 with, again, a good chunk of the bear market in the red. We flip blue at $5,000. And then you get to pretty much ride the wave, although it was a bit shaky here with the pullback in March due to COVID. However, we've been in the red here for a long period of time. And in fact, we're seeing something that's quite unique here. Bitcoin has had a monthly break above the momentum indicator. But here's the thing. It's not about price getting above the momentum indicator. It's about getting that blue flip, right? Letting us know that the trend is actually reversed. And we haven't seen that this time. So what's that telling us? It's telling us that the indicator's saying, this is not a sustained rally yet. Perhaps if we get another major month of follow through, perhaps, maybe we get that blue flip. We haven't done it yet. I gotta tell you guys, I know there are a lot of guys out there, a lot of gurus who will tell you that there's an absolutely perfect indicator, 99% success. I'm not going to even say this indicator has that kind of degree of certainty, and it's an indicator you need to use on the right time frames. Unfortunately, people use it on short-term time frames like most indicators where it just simply doesn't work. But when you look on these long-term time frames, this indicator has been one of the most consistent I've found over the last 12 years. It's used by a lot of professionals in Forex markets. And the key thing here is that this tells me not just Bitcoin is probably not ready for a full-scale bull market after multiple months testing around this indicator, still maintaining red. Take a look at Ethereum in the red since back in May of 2022. Almost a full year still in the red. Even with this upward price momentum, we are still in that range. But let's not just discriminate against cryptos here. I'm not here to bash crypto particularly, guys. I'm here to, again, drive the point that asset markets do not have the liquidity. With the Fed not coming to the rescue in full swing and lowering interest rates and printing a lot of money, right? We're still in a contractionary environment, high interest rates, the highest rates we've seen in over 12, 13 years, actually around 15 years, excuse me. Take a look here at the S&P 500. We've been red since March 2022, still no flip. It is flat here. The price is still far away from that range. And let's go ahead and take a look at previous bear markets here. Look at how well this showcased. This is an indicator, by the way, guys. I want you guys to realize the TM indicator here. This has been around for a long period of time. And this isn't something that was just kind of modified and back tested to look good on the charts back in the past. This has been around for decades. So this is an indicator that, again, has proven really great consistency here in 2008, capturing the vast majority of the bear market, allowing you to really wait on the sidelines until you get those real capitulation events. And here during the dot-com bubble, look at how clear this is. And unfortunately, while a lot of people like to doubt that history is going to repeat itself or has a high likelihood of repeating itself, take a look here. We've had a multi-month red period here. And price has not been able to get above it, nor has it gotten a blue flip. Same here with the NASDAQ. Same exact thing here, albeit with a slight blue blip here in the last bear market. Same in the dot-com bubble. This is not a good sign for equities, nor for the Dow Jones. Now, I know a lot of people would say, but Nick, the Dow Jones has a lot of these blue flips. Perhaps the Dow Jones will lead and we'll have defensive stocks doing well, right? Even though I know most of you out there are probably looking, if you're feeling the FOMO, to buy Bitcoin, altcoins, tech stocks, Nvidia, you name it, right? Well, if we take a look back here throughout history, take off price, we can see during the collapse of the dot-com bubble, we had the exact same uncertainty and trend, but went through a multi-year bear market. Over 2 years. Defensive stocks are always where people rush to initially. They think that the defensive stocks are going to do good. They pay dividends and they'll be able to stomach the recession. When in reality, when a recession comes, equities get repriced. Doesn't matter from the defensive stocks to the high speculative stocks. Sure, the highly speculative stocks will get hit harder. That's just the laws of physics when it comes to financial markets. They move up faster during bull markets and crash even harder during these downturns. But no one escapes the reality of an earnings recession. Not even the Dow Jones. And I think most certainly Bitcoin doesn't avoid it either. The problem here is that so many people think that we are going through some absolutely major collapse in the financial system. And this leads me here to my third chart, which is again talking about de-dollarization. People are losing faith in the dollar and the banking system as a whole, and everything is just going to collapse within 90 days. You know, the kind of Balaji statement that Bitcoin's going to go to $1 million, the $1 million bet. If you put up $1 billion, I might think a little bit different, but people like Balaji have much more money than $1 million. There's all these people coming out saying that there's going to be a bank run on the system. It's perfect time to get all in on Bitcoin. Put all of your savings, all your hard-earned money into Bitcoin because the financial system is just going to collapse. Guys, if anyone is telling you to put all your money into Bitcoin, don't listen to them, right? And we even hear someone who is more bearish, right? And I'll tell you guys why. I want to stick on this topic of the dollar here. I want to kind of clarify why this is not a concern. But I just want to let you guys know, even though as we've been more kind of bearish here on the channel, we've been bulls over the last decade up until 2022. But the key thing that I want you guys to know is that we're always fine if you want a dollar cost average or get a little bit of Bitcoin. We got a little bit of crypto as well. I'm not here shorting the market yet, right? I'll let you guys know when I'm generally short or taking action to the downside. We're going to probably do that in the equity space. But the key point here is that anyone who speaks in absolutes, don't listen to them, right? You can have an opinion like me. You guys come here for a direct opinion on whether or not I think markets are really going to be able to sustain a long-term bull market or not. Are we really ready yet? But I'm not here going to sell you some thesis that the dollar, the world reserve currency, is just going to collapse tomorrow, right? People who are telling you these things off of some headlines or developments in organizations like BRICS, which again is Brazil, Russia, China, South Africa, and a conglomeration of perhaps some other countries in the future. Guys, again, I really want to drive home a really important point here. We're going to talk about the Dixie here in a moment, but if you think about, the world reserve currency status, right? Why is it that dollars, euros, the Great British Pound, and in some cases the Japanese yen are seen as world reserve currencies? They're not only strong and resilient economies, that's point number one. And this is where usually people stop thinking about what is required for world reserve currency. The other ones are commonly spoken language, open markets, the ability for people to immigrate and want to work in your economies, solid demographics. China is not a great country, nor Russia when it comes to demographics. It is not a country that people are rushing to immigrate to. I'm not trying to be political. I think they're beautiful countries in a lot of ways. I'd love to go spend time in Russia and China. Unfortunately, though, they are being geopolitically extradited from the world right now. Companies are moving from China, businesses, the geopolitical sphere is isolating these two countries, and tensions are rising. It is not where they're looking to park their capital. The dollar looks like a pretty sweet deal right now, whether you like the Fed or not. I'm just trying to be real with you guys here. I would feel terrible lying to you guys, telling you go buy Bitcoin, use my Bybit referral link, and go speculate. Do everything here, just like you did over the last decade. We don't have the monetary policy for it. And on top of that, those are the kind of things where people will sell it to you and they won't think twice about the fact that you're going to likely lose it all, while they benefit from your liquidations and your bad trading habits. I'm not going to push that here in this channel. I will be here during bull and bear markets because I want to do my best to help you guys guide through this very uncertain and challenging and choppy period in markets. Here's a really good way to kind of step back here. The dollar index is not a measure of the dollar's direct value. Yes, fiat currencies over a decade's time are going to lose their purchasing power. That's the same with every currency across the world. But if you're really thinking about going short the dollar, betting against the dollar, look no further than the past 15 years in the dollar's trend. Every single time we've pulled back in the dollar index, this is a measure of how the dollar performs against a basket of other currencies. Every time we've roughly pulled back around 13.5 towards around 15.5 points, roughly speaking. You can see the measurements here in each of these corrections. Generally speaking, around a 12 to 17% correction in the dollar. This has been the time to buy the dollar, to go long the dollar versus other world currencies. And while the dollar has had a cool down here over the past couple months after making an enormous breakout towards its highest level since 2002, the fact that it's holding up at this range is pretty damn good. I gotta say it for what it is, guys. And the more the dollar corrects into that typical 13, 17 point decline range, it's already at 13.8 at the moment. Excuse me, 15 points is where we're looking for. The more it moves into that 14, 15 point range, I'm going to start getting bullish on the dollar. I even start building up some dollar positions, or if anything, I'm going to be generally more inclined to be short assets. Everyone has their ride for a while, guys. You got to know, though, when it's time to strike on the other side of the trade, to be a contrarian against the crowd. The crowd right now is not bearish. If you look across YouTube, if you look across Twitter, we're far and few, just one of the few groups of people who are simply pushing this thesis that this is a relief rally. And I got to say, if Bitcoin is going into another bull market, like a lot of people are claiming, it's got a lot of uphill battles to fight. First off, you've not only got a global macro decline in demand, which is starting to signal an earnings recession. We just saw global PC shipments slide in Q1 to its largest decline we have ever seen in an annualized period. Personalized computer shipments declined 40% versus the first quarter last year in comparison. And Apple saw the biggest decline, double-digit declines versus other different types of computer companies, the worst decline we have seen in its history for computer sales. Now, to be honest, I'm looking more forward towards mobile phone data, things like that, but really, consumer electronics are a great signal of consumer sentiment and whether or not there's going to be the demand to continue driving these absorbent valuations in equities. Not to mention, we've got a lot of potential sell-side pressure in crypto. More directly and close to home for crypto, the Ethereum Shanghai upgrade will allow for people to dump loads of Ethereum, a stake worth $31 billion worth of ETH that have been locked during this proof of stake period that couldn't be sold in the market. Now, we're not going to get any buy side pressure from this, right? Some people might come in and buy the dip, right? We have to hope for that. We know that there's $31 billion of new available supply in the market with all that new staked yield on top of it as well. It's going to be coming out onto the market. That is not going to benefit Ethereum's price. On top of that as well, we've got the Mt. Gox creditor registration period ending, which means that by October of this year, during that window of time, Mt. Gox needs to settle back tens of thousands of Bitcoins. Some of them are going to be supposedly held by the two biggest creditors. The rest, we don't know. And to think that that's a negligible amount of Bitcoin to add to the market, I would think, again, that's a lot of Bitcoin. Not to mention at a time where we still have the grayscale GBTC product trading at a massive discount towards its supposed net assets under value. So coming back here to Bitcoin, while the daily trend does look exciting, while I understand the FOMO is real for a lot of people, when you zoom back out into the longer term time frames, it helps to bring a better picture towards what's really going on, or at least what's more likely to be going on. At the end of the day, as a trader and investor, you got to put your cards, you got to put your bets in one direction. Sometimes it's best to be in cash. It's okay to miss rallies. It's okay to miss shorting opportunities. But if you are going to be placing a bet, you've got to be confident in it. You've got to be able to look at the data and really try to determine the most honest opinion you can. I don't really have any benefit from being doom and gloom, guys. Trust me. A lot of the channels out there that are selling bullish narratives are doing better. And I think many of them are great people, guys. I'm not here to bash anyone particularly. I'm just trying to share here that I think one advantage we have here on this channel is that we are macro investors at heart. I've traded over the last 12 years since 2011. And I started trading in equities, commodities, Forex, got into crypto as well. And that kind of macro knowledge and knowing how to look at those long-term timeframes is such an advantage that allows you to survive and sometimes even thrive during bear markets and continue doing the same during bull markets where it's easy for anyone to make money, for anyone to seem like a genius. Those who know how to survive bear markets and know how to keep the principle in mind of knowing what they can afford to lose, not what they can afford to make, are going to be the ones that continue to make generational returns and protect those returns. Your enemy is not trying to hedge against 6-7% inflation on an annualized basis. Your own worst enemy is yourself, and making a critical mistake of making the wrong trade, chasing hype, letting FOMO take over, and potentially losing a lot of the money you worked hard for. So, I know I rambled a pretty good amount, guys. I hope you guys enjoyed that rambling. If you liked it, consider dropping a like. It's one of the best ways you guys can support the channel. And if you guys want to check out some of our partner tools like Lux Algo that we talked about earlier, you can see it down below in the description, get 30% off. And if you guys want to get access to our momentum indicator that we talked about, that's an exclusive indicator that we talk about within the Dash report. So if you guys want, you can check that out down below in the link in the description. We wrote a really good article talking about some of our price predictions for Bitcoin this month in that newsletter, as well as some of our trade setups we're looking to get into, shorting to the downside in equity markets, some of them related to the crypto space. So that's it for today's video, everyone. Thank you all so much for giving me some time to ramble as always, and I'll see you all in the next video. Take care, everyone.